Alaska, underexplored, huge gold deposits. We've got the right signatures in the right rock type, coincident with this very hot gold market. It's a really, really exciting time for us.
With a lot of moving parts, it's difficult to actually operate and manage that, but it's even harder for some investors to understand. So then you have to be on the front foot there and take control of that. Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. That helps us to understand which companies you think we should be spending our time, money and effort on for you. And do leave your comments below. That helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course what you thought of the company. You can also catch this as a podcast, article or transcription at cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Matt Gill, who's the CEO of White Rock Minerals, an ASX company which for a long time, last 10 years, no one's really cared about. So they've been bumping along around 10 million market cap for a long time with their Australian gold-silver project, quite a small one. That was until recently when they announced some numbers coming out of their Alaska project, the US project, with this high-grade zinc and silver. They've also brought on board Quinton Henningh as a technical advisor and promoter, which has helped them raise some money in the US. And they've just announced a $10 million raise, which obviously allows them to develop the Alaska project. Not quite sure what the market would like them to do with the Australia project. He discusses some options available to them. They've got a PFS, like I say, relatively small project, strategic partner, or develop themselves. Who knows? But take a look in the description below at some of the topics we discuss about how they're going to move the company forward. It's a new dawn, new era, so maybe things will change. Anything interesting in particular, click on the number beside the topic. That's called a timestamp, and that will jump you to that part of the video. Otherwise, enjoy what Matt has to say. Matt, how you doing, sir?
Good, Matt. How are you?
Not too bad. The Matt shows. Here we go. So we're going to hear about White Rock Minerals today. So thanks for coming on. New story to us and the listeners and viewers of this show. First of all, how are you doing? Are you at home? You hiding? Because you're in Melbourne, aren't you?
Yeah, this is my humble study here in Ballarat, so the centre of gold mining, certainly in Victoria, so in Victoria, Australia. Fortunately, not in Melbourne, which is going through a pretty terrible second phase of the COVID and a lockdown. So yeah, feel for my fellow Melburnians. I grew up in Melbourne. Now my family's in Melbourne. So yeah, it's a really tough time for everyone.
Well, a salutary lesson as in, you had COVID. Everyone then was allowed back out into restaurants and so forth, and now you're getting a second wave. So yeah, it's tough. It's tough. But
tough.
Let's talk about mining instead.
Yeah, good.
Yeah, you up for that? Good.
And gold. Yeah.
And gold, of course, very topical.
Yeah.
So why don't we kick off, give people that 1 minute overview of the business, then we can pick it up from there.
Yeah, thanks, Matt. So White Rock Minerals, ASX listed, been listed for 10 years. We have two projects. We have an advanced gold and silver project in northern New South Wales in Australia. And we also have a high-grade zinc silver gold project in central Alaska. That's the focus for the business as we try and grow it from a junior explorer to a developer to a producer ultimately.
Okay, so lots of good stuff happening. But let's go back to the beginning. You've been at this 10 years. What did you set out to do 10 years ago? And how has this thing evolved? And I understand it's evolved a lot in the last few weeks, but let's just go through that journey if you don't mind.
Yeah, no, look, that's a good question. So White Rock listed with the Mt Carrington gold and silver project here in New South Wales. So that was its asset on listing in 2010. I joined about 5 years ago. I'm a mining engineer, and I joined with the board's desire to take that project through development, construction, commissioning and production. Since then, with the Mt Carrington project, we've taken it through to scoping study and feasibility study, and its next step is approvals. During that journey in the last few years, it became obvious or evident to a lot of us that a single project story when you're a small junior didn't quite have the interest, news flow, sizzle in a retail market when you're a small junior. And in the course of looking to raise money, this Alaskan asset came across our desk. I always remember taking that call. We were trying to raise money for Mt Carrington, and it's actually a group that also operates in London. Said, no, probably not, but would you be interested in an Alaskan asset? And I always remember a thing I've learned over my career: don't say no to something you don't know what you're saying no to. So we were looking for a second asset. We were focused on Carrington. This Alaskan asset came across the table. Roll the clock forward. It has been the game changer for the business in the last few months.
Well, that it has. So why don't we start with Mt Carrington first, though, because it seems to be not as exciting, or isn't exciting the market as much as what you're doing in Alaska. So it still has value, but let's try and understand that, so break that down. So over 10 years, you've taken it through the feasibility study, waiting for approvals to get it. That's not an unusually long period of time, but it's taken a while. Is that because the ASIC was quite high in a low gold environment, couldn't get the market excited, couldn't really get funders excited? I mean, what was the problem? What was holding you back?
Yeah, the challenge is that Mt Carrington, we've got the full 180 square kilometre tenement package, so exploration upside, but the geology is such that and our mine planning suggests it's going to do around 35,000 ounces per annum. Now, that's not a big number, not a particularly exciting number. It's not big enough for the funds to be interested in. And it hasn't necessarily got the sizzle at the retail high net worth end. So it's all in sustaining costs in current Aussie gold price environment. It's 100% margin. I mean, it makes a lot of money. But the size didn't resonate to either the retail or the insto. And I go for quality over quantity any day. Something that's making 100% margin. So that was one of its headwinds. And the other headwind was it's got 12 to 18 months of approvals ahead of it, which is, a pretty boring story on its own. Yeah. I mean, every project goes through it. Every project's got to go through it. But when you're trying to raise money for approvals, it's exactly that. So that's why when the Alaskan asset came across our desk, the Alaskan asset had all of the low-hanging news flow, sizzle, upside, scale, all before it, and we thought that we could progress both concurrently. The Alaskan asset for the sizzle and the excitement, Mt Carrington, because ultimately it stops us having to tap the equity market. It generates $10, $20 million free cash a year once in production. So we thought that the two, and you touched on it, while they are different and jurisdictions and commodities, actually can work together as well.
Okay, but it's a bit more than a hedge for you. Gold's obviously very topical at the moment. The gold bull environment like we've got now, this, as you say, 100% in Aussie dollar terms. But at 35,000 ounces, you're right, it's not that interesting to a lot of people. But is this something that you think that you are going to try and get into production yourselves because of the reasonable amount of cash flow it's going to generate? And then it's a question of, what do you do with that cash? Or is it more gold and M&A in Australia? I imagine that's quite expensive. Or are you putting that towards the project in Alaska?
Yeah, so that's a really good. So it's great to have two levers to use. I need to point out that Mt Carrington has JORC resources for both gold and silver. Now, the silver is in separate deposits to the gold, so we are one of the few genuine exposures to silver on the ASX, and that's an important point. In fact, in terms of in-ground value, there's as much silver in the ground as there is gold. Having said that, though, the size and that approvals headwind, we're redoing the feasibility study with the better gold price and a review of the OPEX and CAPEX. That will make the size of the prize, the financial metrics, even better. It still doesn't address the ounces per annum, but it shows that it will generate a lot more. it still doesn't address the 12 to 18 months of approvals. And so if we could find, and we'll come back to the Alaskan asset, but if we could find a joint venture partner, that can take the long view, can see through the 18 months, can see the size of the prize, then that's absolutely something we would look at. And like anyone should say, if someone wanted to buy it, at the right price, if it made sense for White Rock and its shareholders and added value, then of course, people would be wrong to say it's not for sale, because anything is for sale at the right price, probably even your house, even if you're not looking to sell it. So, and we'll touch on the board, I'm sure, at some stage. So we're quite open to what's in the best interest of our shareholders in moving that project forward, whatever that looks like, to get some of that locked up value reflected for our shareholders.
I mean, the other component to this is you're starting to become quite a complicated story to understand, not just because of the different jurisdictions, but because of the different commodities that you're after. Obviously, gold, silver, precious in Australia, and you're after zinc, which is not exactly a loved commodity at the moment, and different sets of skill sets required. So with a lot of moving parts, it's difficult to actually operate and manage that, but it's even harder for some investors to understand. So don't you have to be on the front foot there and take control of that?
So I would probably disagree a little bit, Matt. If you're going to grow a business, it is hard to do it with one asset. We're in Australia and the US, so they both speak English, first world jurisdiction. Alaska is so far around the time zone that there's a great overlap actually with the east coast of Australia. In terms of commodities, we've got gold in both, we've got silver in both, and we just happen to have zinc as well in the Alaskan. So my argument would be commodity diversification, gold, silver and zinc. Jurisdictional diversification, I'm glad and I've worked in Africa and Myanmar and India. I'm glad that it's in first world jurisdictions. And if you're trying to grow a business and add value, doing it out of one asset can be difficult. So yes, what is White Rock? Okay, well, White Rock is a diversified precious metals and zinc explorer and developer. And we've got a skill set at the board, and my exploration manager, and we'll come to Dr. Quinton Henningh on our board from the exploration point of view. So I've learned that we won't resonate with every investor. We can't be all things to everyone, because to your point, some have said, Matt, if I want to be gold, I'll go there. And if I want silver, I'll go there. And if I want zinc, I'll go there. But those that can see that commodity diversification, that risk portfolio diversification, that we do have high-grade zinc JORC resource, but we're chasing gold. We're backed by, those assets when we're looking at this current project that we're going to be drilling in a week or two.
Okay. Again, just on Mt Carrington. So can you give us some of the other numbers that, I know your own words, it's a fairly boring period waiting for approvals, not too much to say, but just remind us some of the numbers there. We've talked about the ASIC in Aussie terms. So what's the scale of this, life of mine, etc.? Yeah,
so the feasibility was done at 1,700 Australian dollars per ounce. It's currently over 2,500. So at 1,700, it spat out about $10 million Aussie per annum free cash. It has an initial, so just 2 of the 4 gold resources give it an initial 4.5 year mine life. There's still another 2 gold resources, and there's the 4 silver resources not in that plan. It has a payback of under 2 years, and a rate of return of about 35%. So good, solid numbers at 1,700. We have publicly released a sensitivity at 2,500 and 2,300. So at 2,300 Aussie, so still under spot, it's got a payback of a year. It's got a rate of return nudging 80%. It generates 20 to 30 million in free cash, because all that gold price improvement goes straight to the revenue. So, I need to say it's at past mining, so you walk onto ore. The gold pits are pre-stripped. There's 100,000 metres of drilling behind it. There's a tailings dam there. The plant site is cleared. It's on mining lease. So there aren't many projects that advanced. But it's got that approval step that just is holding it back. We crack that and we're away.
Are you frustrated by the valuation? Because it's 28 million market cap for the entire company, and that's with the good news, recent news, and the fundraising, which we're going to talk about. You've got a feasibility study. You're telling me the numbers are excellent, and you're going to be away at the races. The type of cash returns, the payback in less than a year, and people are just not valuing it. Why?
So it's a frustration, and I often wonder: is it because we're not clear in our story? Is it confusing? Am I talking to the wrong people? Should I have talked to you earlier? Is the investor relations channels that we're using wrong? Is it macro issues or is it White Rock micro issues? I have to believe, and I do believe, I'm a mining engineer and I'm a little bit more measured. Some people do fall in love with projects and, get glassy-eyed and think it's the best thing. I won't be the last one that sits in front of you, Matt, and I'm not the last one that'll say we're undervalued. Yeah. Most projects, value compared to the company value, there is a disconnect. That's a frustration, but that's the challenge. The challenge for me is to try and bridge that gap. Not 100%, but even halfway between asset value and company value. So that's the frustration, but that's the opportunity. And that's what I tell investors, that at some stage, I have to believe that the market will wake up to what we've got and the opportunity between the underlying asset value, its potential, and where our market cap is. And that's what drives a lot of what I do in my role, daily, is to advance the assets, but make sure that the story is getting out there and that we will find the right people. And some will resonate. We've got 2,500 shareholders, so we have a chunk of people that do align with what we're saying. But sure, we're not going to attract everyone.
Okay, well, let's talk about your second project in Alaska. So how long have you had that?
So we acquired it in 2016. We did, and when we acquired it was 15 square kilometres with a 127 drill hole database. In 2017, we gave that drill hole database to independent geology experts and generated a maiden JORC resource of 9 million tonnes of just under 13% zinc equivalent. So it's a zinc-silver VMS, polymetallic. In 2018, we raised money and conducted our first drill program ourselves. In 2019, we had attracted $1 billion company in Sandfire to a joint venture. So we did a second season where we were the manager last year, another $8 million program, and did more drilling. Earlier this year, Sandfire withdrew from that JV. In the process of our work on the ground last year, chasing the zinc-silver high-grade VMS, we discovered this significant gold anomaly. So earlier this year, we set out to raise some money, only $2 million to get on the ground and test this significant gold anomaly. Roll the clock forward, we've been able to tuck away $15 million to explore this gold anomaly.
Amazing.
And our market cap has gone from 8 million a few months ago to currently be just under 40 million.
Right, well, that's 40 million, that's extraordinary in such a short space of time. Let me just come back to, so you've been sitting on this project for 4 years, again, weren't getting much love and attention in the marketplace up until you started to raise some money earlier this year. I mean, what do you think the sort of turning point was? No,
well, we did get attention and focus, and we got success from raising money for our Alaskan asset in 2018. That brought some major shareholders in on the back of the Alaskan asset. And last year it attracted a cornerstone investment in Sandfire. Sandfire's ASX listed. So it was getting interest. The turning point was the coincidence of this significant gold anomaly over 15 square kilometres in a highly prospective belt. It's called the Tintina Gold Belt in Alaska. It hosts the 10 million ounce Pogo gold mine. It hosts the 10 million ounce Fort Knox gold mine that most people have heard of. It hosts the 45 million ounce Donlin project owned by Barrick. So, Alaska, underexplored, huge gold deposits. We've got the right signatures in the right rock type, coincident with this very hot gold market. And a lot of it is about timing. So it's the confluence of all of those things, on top of having Dr. Quinton Henningh on board, supportive. He's our technical advisor and introduced us to a lot of the investment community in North America, such that half of the placement that we've done, that money is out of North America.
Yeah, he's a fantastic promoter for sure. I mean, how do you afford someone like that?
We don't pay. He's on a retainer as a technical advisor. He's doing it because he believes in the project. He participated in the placement. He's a great exploration geologist as well as a promoter. To be fair, he's very, very good technically. So he's a great sounding board for us and Rowan, my exploration manager. And he's part of the team, and it's great.
Oh, that's great. Okay, so but you know what I mean when I said earlier, no one had noticed you, and you defended that as you should. But in your own words, you were worth $8 million up until a couple of months ago. So when I ask, what's changed, so Quinton Henningh coming on board and helping you technically and with the promotion in North America, the gold bull environment helps because you've got this gold anomaly that you want to investigate, because like I say, silver's not a kind of buzzword in the market. So not silver, sorry. Because zinc isn't a buzzword in the market at the moment. It's it's sort of on downward pressure all around. So okay, I understand. So what now? You've got all of this money. You've got $15 million. That's exciting times. So how do you spend it?
So mid-June, we got on the ground with 6 geologists, crawling all over this gold anomaly. We've taken thousands of rock chip and soil samples. They'll keep going for another couple of weeks. We're mobilising a drill rig as we speak, and we hope to be drilling by the first week of August. So that'll go through as long as the weather in Alaska will allow us, which, while we're central Alaska, winter, as much as I love geologists, it's a bit hard to, have them working in sub-freezing temperatures for too long. So the drilling will go as long as it can, probably mid-September. But what this money allows us to do is to be funded for next year as well. So irrespective of success, technical or otherwise, we'll be funded to have a full season next year as well. So, for your listener, for the investor, to have a junior that's, got the Carrington story, a high-grade zinc story, but a gold anomaly, and we're fully funded for this year and next year. There aren't many juniors that can probably sit here and say that.
No, it's fantastic. It's more money than you've had in a long time. So I'm just wondering the order of play for you. How did you decide to map that out? Have you decided what you're doing over the next 18 months?
So we've got a pretty good idea already what we would do. It is this is our 3rd season, and and the process of geochem and geophysics as precursors to drilling a fundamental exploration methodology. But at the end of the day, the only real test is the drill bit. So it has to include drilling. So, and that's what we've done the last few years, and that's pretty standard template of geochem, geophysics and drilling. And on that basis, we know that we can work from roughly May to September. We now know how much drilling costs. We've had 2 full seasons and are doing our 3rd. We've got a fantastic team on site in Alaska. We use 2 great geologists out of Fairbanks. And our project's only 100 kilometres from Fairbanks. And the geos that we've used for the last 2 years. So we've got a pretty good feel, even though people say Alaska's, on the other side of the world. We don't pretend to run it daily from Ballarat here in Victoria. We've got great experienced geologists in country. And so we know that while we don't know exactly where the holes will go next year, We know how much we can drill. We know how long. We know how long it will take, how much it will cost, and we make that allowance, and then we let the geochem and the geophysics and the mapping and recon tell us where the drilling will be.
Fantastic. It's been sort of 10 long, hard years for you. Now the money's in. Do you get to reward yourself at last?
I've got a Pinot breathing, but it'll be business tomorrow. No, but to your point, I've worked in junior companies. I worked with one that went through administration, your insolvency, Chapter 7 bankruptcy if it's a US. I'm not sure what it is in the UK. So I know what it's like when things go bad. And to your point, absolutely attuned not to let it go to our head. Capital raising is, and you would know from your experiences, capital raising is hard. It's a lot of roadshows, conversations, discussions. You've got to get people comfortable with you and the trust, and then the delivering. Markets are hard. White Rock is one of hundreds of juniors, trying to chase the funding. So I know how hard it is to get it. I have a respect, and I'm a shareholder, a feel for, shareholders wanting success. So, the last thing we will do is turn around and be frivolous with what we've raised. We know we've got to deliver. The good thing with Alaska, because it's such a tight period, it teaches you to almost be military with your planning. So we don't have a day to waste on the ground, and a day wasted is money wasted. So the good thing with Alaska is you use the downtime to plan and interpret your data. So the first day you hit the ground, it's then every day you maximise, and that's how we're going about it.
Okay, so given what you've learnt over the last 10 years, you've worked in the junior exploration space, you've been involved with something which has gone into bankruptcy previously. It's tough, right? Mining, especially down the junior side, is very, very tough. But if you don't build the right type of company, the market's not interested. So, Mt Carrington suffered perhaps because it was perceived as too small, and therefore is not attractive to, a lot of people. So what are you going to try and build at Red Mountain? What type of, or what scale of business are you trying to build?
Yeah, that's a really good question. So when it's exploration, we don't know how big it will be. On the zinc VMS side, we've already got 2 high-grade deposits with 30 similar targets. And these VMS, these volcanogenic massive sulfide deposits, come in clusters. We know that if we can double that tonnage, we have an economic mine. So we know that as a target. This gold anomaly, we don't know. This gold anomaly's never had any work on it. It will take us at least this year and next year to get a feel for what we've got. Ultimately, and we're positioning ourselves to keep the options open. We've just we'll be doing a consolidation of our capital structure, because we've got a lot of bits of paper on issue. So that post-consolidation at the end of July, we'll be back to something, like 70 million shares rather than 7 billion. And we'll be more like whatever the share price is, 50 cents a dollar rather than a penny dreadful. And that is deliberately in part so we do look more North American. North Americans do not understand how Aussies can have so many bits of paper, even though the maths are right.
Okay.
We're also talking to the OTC about getting a secondary listing on the OTC. I've talked to the Canadian Securities Exchange. I've talked to people in Canaccord about the TSXV. Should White Rock dual list, merge, spin out? We're keeping all of our options open. So we don't have a particular end game. We need to grow and see what the drill bit tells us in Alaska, see how the market's responding to what we're doing. And if that means that we need a secondary listing or an ultimate split out, because, Alaska's natural home is in North American exchange, we're open to that. But at this stage, we just want a year and maybe 2 under our belt, so we know what we're dealing with. A bit too early to start divesting something that could be an absolute game changer.
I was going to ask, actually, consolidation is not something that the Aussie market, certainly retail market, tends to care about, and companies sitting with billions of shares out, and I wondered why. So that's answered it. I also like the fact that you're talking about walking before you run with regards to making that decision, because it's early days. Let's remind people you were $8 million company 2 months ago. Okay, that's interesting. So with regards to this increased land or footprint that you've acquired, because that comes back to that question of scale. What is it you're trying to build here? You wouldn't have done that unless you thought you needed to go and find some other larger VMS type deposits.
That's right. So we started when we acquired in 2016. It came with 15 square kilometres. We've expanded that as we've explored. It was all vacant, and we haven't touched on native title, but the Alaskan process is crystal clear, and nothing like what the Canadians or Australians have to struggle with. And so given that VMSs come in camps, in clusters, so we took a strategic first mover district scale position. And so we're currently sitting on just under 800 square kilometres of central Alaska deliberately, so that we cover the prospective VMS horizons, but also this Cretaceous granite intrusive related gold system potential. The reason for that is that pegging in Alaska is very simple. It's almost literally dropping pegs in the ground. And as long as you pay your annual claim, you've got it forever. Unlike in Australia, where after 5 years, you've got to relinquish half, and then after another 2 years, relinquish half of that. As long as you're meeting your payments and your obligations, so that, we ran the risk of, if we were too slow and maybe I watch a bit too much Discovery Channel, could have been very competitive. People watching what we were doing and started to claim where we would have ultimately liked to. So we deliberately took this position to give us that district scale and opportunity and upside.
Okay, that's interesting. Now, with that comes liability, because you're going to have to spend some money to work out what you've got there. How do you quickly, or how do you accelerate the ability to go and find targets which you think you should be spending money on? Because I'm getting the sense that this is very different from Mt Carrington, in the sense that it has the potential to be a much larger project, but you've got to plan that out differently. You've got to spend money differently. So what's the plan?
Yeah, so that's a really, really good question. So the great advantage that we had is when we acquired it, it had 2 known deposits, had 2 known high-grade zinc VMS deposits. And there was public domain Alaskan Resources Department, geochem and geophysics. And we simply got that data and gave it to experts, and we said, here's 2 known deposits. Here's the geochem and the geophysics of the region. These 2 deposits have a particular geochemistry and geophysics signature, fingerprint, behaviour. Take that response. So we matched the existing data with these 2 deposits, and we said, have a look in this field and see where else you get this same coincident geochem and geophysics response anomaly. 30 targets later, which is why we went from 15 square kilometres to 400. And then last year, for the first time, we flew modern airborne EM. So we flew 500 square kilometres of ground, and you get a map that shows then where you want to zero in on. So there's a whole bunch of that ground that doesn't have the geophysics response, but it lights up where there is. And so that then zeroes us in to get the boots on the ground in just those areas, and we do the on-ground geochem and geophysics. And then if that works, the drill follows.
Okay, interesting. Last question, because I know we've been talking a while now. On Mt Carrington, if you're a betting man, do you get rid of this before before you kind of get these approvals, or after?
So my opinion is that the best value add for White Rock and its shareholders is to get it approved, because that removes that perception, and then you're in the very traditional construction and commissioning. It's a 12 to 18 month build and construct, and then you're tapping this $10 to $30 million of free cash a year. get it to approvals, and White Rock can still then decide whether to get rid of it or not. But I think the best value add, because at the minute it's holding back more than the value of taking it forward. So if we could find a joint venture partner, we've got people in our data room. We've made no secret of that. That is in the public domain. A strategic partner to work with us would be fantastic. But the current market, the current encouragement we're getting from our shareholders, the current gold price, it might be that we could afford to do it now ourselves. We're keeping all options open.
Okay. Matt, thanks very much. Nice run through. Exciting times in Alaska. Yeah,
look, it's a shame the COVID thing, it's holding us back from getting on the ground personally. I've been there before, obviously, but as I said, Zoom, emails, and the great team we've got on the ground in Alaska. It's a really, really exciting time for us.
Beautiful. Okay, Matt, we'll speak to you soon. Pick up the phone if there's anything new that you want to talk about. We'd be delighted to take that call.
It's been great chatting, great questions. Thanks a lot, Matt.